Hey guys, welcome back to the channel. On today's video, I want to discuss a potential recession we have upon ourselves. What steps am I taking in my life to prepare for it? And what steps you should take to set yourself up for success, and if such conditions rise. It's no secret that with a historic high inflation and with very aggressive policy tightening by Federal Reserve, a lot of people are feeling very on edge about the whole economy right now. A lot of people are predicting that we're about to have a recession. Now, recession by definition is a decline in economic activity for 2 quarters, along with other key indicators such as unemployment, consumer spending, and all. We just had the Q1 GDP decline. And by definition, like I said, if we have another quarter upon ourselves, it's going to go into negative. We might potentially hit the recession. Indexes are down. I mean, we have NASDAQ down almost 25% on the year, and NASDAQ had the worst 4 months in the history of NASDAQ. We have Russell down almost 25%. We have S&P 500 down almost 15%. We have Dow down almost 11%. Now, S&P and Dow still have a little bit to go to catch up with NASDAQ and Russell. If Federal Reserve over tightens and increases the interest rates too fast to combat this inflation, we will have a recession. How do we prepare for it? Well, there are certain things that I'm doing in my life that prepares me for such conditions. One of them is I always have an emergency fund. So I guess this would be the tip number 1. Now, unfortunately, according to CNBC, 78% of Americans live paycheck to paycheck.
I declare bankruptcy!
Meaning, if they had a $500 repair tomorrow, they will probably have to get into a consumer debt to pay for that. Now, in the recessionary conditions or in a recession, a lot of businesses have to cut their expenses to survive in those conditions, meaning there will be a lot of jobs lost.
Oh yeah, we gotta trim some of the fat around here.
Trim the, what do you mean by trim the fat?
Or a lot of hours cut. We just had similar conditions in 2020 during COVID, where the whole economy almost shut down. You know, a lot of restaurants were closed down. Employment was really, really high. Now, whether we're gonna have the similar situation again, I don't know. If the Federal Reserve over tightens their policy or goes too aggressively, too fast, we might have similar conditions. So it is essential for you to have your emergency fund. Now, I typically keep 6 to 12 months of expenses in cash in case something happens, something comes up. My second tip would be to try to cut down as much debt as you can. If you can pay it off, that's great. If not, you want to pay down as much as possible. And one thing to consider is there are consolidation loans. Basically, you take out the loan and you pay off all your interest rates. Some of them are higher, some of them are lower. Especially the credit cards usually have the highest interest rates, and you don't want to be stuck in a recession with potentially losing your job with a very high interest rate debt. But yeah, if you can avoid your debt completely, or if you can pay down the entire debt, that will be a great time to do it. My next tip for you is to cut back on your expenses. Again, going back to like creating your cushion. In order for you to create your cushion, you're probably going to have to cut back on some expenses. How do you cut back on your expenses? I reconcile my bank transactions. I go into my bank and I look into at things that I spend. I have some apps to help me to deal with it. One of them is Mint. It's a budgeting app. I've been using it for the past 9 years. And then there's another one that I just started using. It's called Truebill. And by the way, none of these are sponsoring me. I wish, but I'm not. I'm relatively a small channel for now. So maybe in the future, if they want to hit me up and sponsor the channel, I'm all for it. But as of right now, no sponsors. I'm just recommending the apps I'm using. So Mint and Truebill. But yeah, I use those apps to just kind of track where is my money going, right? I mean, it's much easier when you have all the transactions consolidated in one app, and you from there it's grouped in certain groups like restaurants, entertainment, traveling, and so on and so forth. So I go over my transactions and I see where the majority of my money goes. Now, I could probably live without $6 coffee. I can make my own coffee. I could probably live without doing takeouts. I will cook at home and I'll save money. I could probably live without going out all the time. So now that you cut down on your expenses and you've built up your cushion, what's the next step you should be taking? Because I'm an entrepreneur and because I don't have a regular 9 to 5, I own businesses, I try to create an additional stream of income for myself. Now, I don't know if you are an entrepreneur or you have a job. Depending on how you earn your money, you can either, one, like I said, consider an additional income stream, or two, work on your resume and start applying for better paying jobs. Start learning more skills, because right now the unemployment is the lowest we've ever had. A lot of firms and a lot of businesses are offering more and more salary and more and higher hourly rates just to get you on board. But in a recession, all of that will disappear. Money will start shrinking and the businesses will have to cut expenses. Just like I'm recommending for you to cut expenses, businesses will have to start cutting expenses to survive in a recession. By learning new skills and becoming more valuable to the companies, you are setting yourself for a success, making sure that you are harder to replace in a job force. I guess the last tip I have for you today, and this is what I'm doing in my life as well. I'm an investor. I have a lot of my money invested into a US stock market. And during a recession, you want to be invested into companies with strong balance sheets. If the company's balance sheet is looking bad, meaning they have a lot of debt and no cash on the balance sheet, those companies most likely will have to either take more debt to survive or get bailed out depending on the size of the company, or they'll disappear during a recession. You don't want to be invested into a very risky companies that don't have money to back them up in the recessionary conditions. So move your money and invest your money in the companies that are better prepared for recessions. Now, if you don't know how to read the balance sheet, I can make a separate video about it. What does a typical balance sheet look like? Well, it's assets minus liabilities, and then whatever is left is equity. Now, if the company has very low assets, very high liabilities, and the equity, or there's no equity or very low equity, maybe this company is not a good investment during a recession. Maybe this is a growth company, a high risk company. You want to be invested in the companies that are low risk, the ones with very strong balance sheets. So reconsider moving your money, reconsider reinvesting your money, reduce your exposure to risky assets. Before I leave, I want to say this: you can never be 100% prepared for a recession. I wish we could. I wish we all had some sort of guidebook for life, right? But we can't control certain things in life. The things we can control in life is how we save, how we spend, and whether we have or we don't have a cushion for recessionary conditions. So hopefully this video gives you a little bit of perspective as to what I'm doing in my life currently to prepare for such conditions. And I hope that this video is helpful for you and you can reconsider certain things in your life. As always, if you like my videos, if you wanna see more of my videos, consider liking and consider subscribing to the channel, and I will see you in the next video.